It's our Forex blog for April 29th, 2014, and these are our currency indexes. But before I show these, which is one of my favorite ways of trading, let me just give you a preview of how our Forex signals are coming. I spent about a year working on our last signals, and they are using our program's Visual Basic script editor. It was about 15,000 lines of code, and unfortunately it got to a point where it would not compile anymore. I was forced to rewrite 15,000 lines of code. I mean, it's much smaller now. It's only about 3,000 lines into C++. C++ is so much more powerful. We can do so much more. But here is an example of our new signals, which I've only worked on for the last month and a half, using some of the highest probability methods I've been able to find. And you can see, you have a small loss here, small win here, huge win, small win, nice 15, 20 pip win, 20 pip win, huge 10, 20, 30, 40 pip win, and another 10 or 15 pip win there in the euro dollar. Now before, I had a very hard time getting signals to be very accurate in the pound dollar, euro yen, because there's a lot more noise. So that being said, and this is only a month and a half into development, you can see pretty much a break even here, and then a small win here, break even, and we're still on a trade here. And of course, here is the pound dollar, small loss, big, well, maybe 20 pip win, small loss, huge win, nice win, and then a small, 6 pip loss. So the signals are coming along very well, given the fact that I had to convert about 15,000 lines of code from Visual Basic to C++ in a month and a half, and I did not even understand C++ when I started. So I learned the language, programming language, and created this all in the last month and a half. Absolutely baffles my mind. It's the hardest and biggest achievement I've done, and it's extremely high accuracy, as you can see, and the wins tend to be bigger than the losses. So anyway, as you can see, I'm very proud of how this is progressing, and one of the things that we have in here is the ability to find, kind of as the swing is developing, a nice little low like this where we can draw up to the last area where it pretty much goes sideways and find fib targets off of that, and they tend to be very high probability, as you can see in this trade right here. This is a trade that you won't find in many other platforms, and one of the reasons why we even are doing this is for our own accounts, and we're not going to offer this to our users for many reasons, legally, ethically. We don't want people taking our software and managing other people's money and getting a cut of it and not paying us. But basically, we are auto trading this. So accuracy is critically important. Waking up and having profitable trades in our accounts each morning is absolutely critical for us. And we want wins that are significantly bigger than losses. Alright, so if you're going to manually trade, here's our currency indexes. This lets you see visually what each currency is doing, and it's an incredible way to trade. It lets you see with your own eyes what the trend is of the dollar, the euro, the pound, the yen, the Swiss, CAD, Australian, and New Zealand. And basically, you just want to focus on buying the strong currencies versus the weak. And if the weak currency is on top, like let's say the euro, you want to sell that one versus whatever the strong currency is on the bottom. That's it. Okay, so you can see, for instance, that the Swiss is falling and is underneath the hourly moving average as of right here. It also makes about a 62% fib pullback, which Fibonacci areas work great on our currency indexes. So this is a very high probability one to be looking to sell right here. You want to sell it versus a currency that's strong, but not too strong. The CAD is already at the upper 2.0 containment bands, very likely to kind of reverse or go sideways at that point. You can see it kind of continued up. In this instance, it did continue, Most of the time these outer bands tend to be where price stalls and goes sideways or reverses. So you're a little bit higher probability looking for a currency maybe like the euro here that is above its hourly. The dollar is trending down at that point. Let's take a look at buying the euro Swiss at this point in time. It's about 5 o'clock. So 5 o'clock and thereafter we're looking to buy the euro Swiss. You can see a nice little sideways rectangle. You buy this breakout right here with your stop underneath here, and it really doesn't really go anywhere. You want to yank your stop up when it goes sideways for a little bit, and you're out of this trade with very tiny 4 or 5 pip loss. Pulls back, really doesn't go underneath this swing low. I wouldn't necessarily buy it here, but you could draw a trend line over the bar's highs right here and go long right here with your stop underneath the low, and the second trade, you know, it works, and it's these bigger wins compared to tiny losses. You know, you might have lost this much on the first trade, you made this much on the second trade, and as long as the euro is strong and the Swiss is weak, you buy pullbacks, and you can see again the risk versus reward is huge. And that's really the secret to trading, and that's why our software is so powerful. By looking at what each individual currency is doing, you can, you know, most of the time, over half the time, be right on your trade, and also have wins that are many multiples bigger than what your risk is. And that's the key to trading. Again, here is the CAD, which you can see is trending up. Here's the hourly moving average. It broke above the previous day's high, which is a sign of strength. The daily trend is up, the weekly trend's up, the monthly trend's up. So if you buy this CAD on this little pullback right here, it's a very high probability trade. You know, it showed that it's been above the hourly for half a day or more. It broke out over the previous day's high and it had a pullback, found support here. You could buy this area right here around 4, and you want to buy it versus a currency that's weak and likely to go down. So the Swiss longer term trend is up. The New Zealand's trend is down. You can see it's been trending up and it's down, and it's very close to the hourly moving average. You could look at selling the weak New Zealand versus strong CAD at that time. And so this is around 4 o'clock in the morning. And guess what? Look what happens on the chart here. 4 o'clock in the morning, you have a nice little pullback right here. Your risk is this. You also know where your next fib profit target is, which is down here. And so your potential profit versus your risk is 4 times bigger than what your risk is. And basically that's, you know, how you trade. You're going to have you're frequently going to have, you know, 3 to 5 times bigger wins and losses. Many times you're only going to make half to 1.5 times what your risk is. But also, once you're in the trade and it starts to go your way, you move your stop from above there, you know, very quickly to break even, or you can cut it in half. And so a lot of trades that are losers are half of what you initially intended. So over a course of 50 or 10, 20, 50 trades, 100 trades, over many months' time, your losses are even tinier than what your initial risk is. And of course your wins are never going to be the entire amount of pips, but most times if you're trailing your stop down, you know, you're going to catch 60 to 80% of those wins, and your wins are over a course of, you know, 30, 50, 100 trades going to be 1.5 to 2 times bigger than your losses if you trade the way we teach. But for those who don't want to have to learn how to trade, again, you can just simply load our FX trading signals, take these buys, big win, you know, pretty much break even, small win, nice 25, 30 pip win, nice 30 pip win, nice 13 pip win.